The Construction Market Guide is designed to provide contractors and construction executives with timely data on the economic environment, materials prices, and the labor market so you can make informed decisions that increase profitability. Inflation is the key topic on everyone's mind. There was initially some optimism after we saw the Consumer Price Index showed that we may have reached peak inflation with the number ticking down. However, the chairman of the U.S. Central Bank, the Federal Reserve, Jerome Powell, spoke and made it clear that they are not letting up anytime soon. And if you think about it, if prices are set by supply and demand, and the central bank can't create supply, they can't drill oil wells or build houses, grow more food, or build more computer chips, but they can impact the other side of the equation, the demand side, if they can get people to spend less money. Well, how do they do that? Well, if you think about it, when people make major purchases, buying a home or a car, most people either borrow the money to do that, which they can impact by raising interest rates as they are, or they tend to pull money out of their investment accounts. And they've certainly had an impact on investment account values, both on the bond, stock, and the real estate side, with asset prices declining recently. The other thing, though, that really causes people to cut their spending is losing their jobs. And unemployment is still strong, so strong, in fact, that some people say we're not in a recession, even though we've seen the economy's output measured by GDP shrink 2 consecutive quarters on quarter 1 and quarter 2 of this year. So that's the thing to keep your eye on. It appears that the central bank is looking at unemployment, and as long as that is really low and strong, they're saying, well, we maybe haven't done enough yet, and we need to keep our foot on the brake to slow the economy down to try to get inflation under control. The Architectural Billing Index still is in expansion territory, but you can see the trend, and it's not a favorable one more recently. We've seen materials prices continue to be all over the place, but generally driven by oil, which has been moderating a bit more recently. New housing starts have really fallen off as we've seen interest rates increase dramatically. And as you take a look at these interest rate numbers, I'll just point out that the 2-year government bond yield continues to be higher than the 10-year, so we continue to have an inverted yield curve, a continued recession signal looking forward. Stocks continue to have a rough go. They had bounced back a bit on that optimism we just talked about, rolling back over more recently, and we'll continue to watch that. So what can you do in your business in response to this information? Number one, I'd say be cautious. Make sure you have enough cash in your business and you're not overextending yourself. Number two, manage your collections. It's important to recognize that in an economic environment that could be deteriorating, your customers' financial strength and ability to borrow money and ability to pay may be impacted as well. Banks tend to be more reluctant to lend in a slowing economy. Thirdly, be careful about hiring. Finding skilled workers continues to be the biggest challenge that many of us face in our businesses, but making sure you have a pipeline of profitable work to keep your team busy is really important as you continue to hire. Know your margins. Understand your profit margins, what your numbers are, what they need to be, and in a slowing economy, not saying we're there yet, but there can be pressure to take on jobs at lower profit margins in order to stay busy, and that can get contractors into a lot of trouble. I'd also say be cautious about equipment purchases and debt. Take a look at how much you need these assets before you buy them. People tend to want to buy things that are tax deductible, and that's very understandable, but if you don't have a real need for them continuously in your business, maybe a good time to be a bit more cautious about those equipment purchases. And lastly, review your financial goals and your business plan. And if we can help with that, please reach out to us. We'd love to chat. Thanks.